Hello folks, this is Raj Sastry from Raj Option Trading. Today is September 7, 2021. I will talk about mid-cap stocks and provide a quick weekly update. With that, we will look at stock news, trading ideas for the current week, and most active, best and worst performing stocks, and few good stocks to buy. So with that, let's jump in. And from a major stock news perspective, we got American Eagle Q2 earnings beat estimates, revenue lags. I think total revenue came in at $1.1 billion dollars. I think it's 35% year over year, but it missed the consensus estimate. That's why stock came down pretty hard. Many of the retail stocks are down because it's a very hard comparison compared to last year. And then we got here Beyond Meat in the news here. A couple of the executives are stepping down, so it may be a good time to look at Beyond Meat, and take advantage of this downturn here. Then we got here Joby. Looks like they're collaborating with NASA to measure noise footprint. I think it could be a good one to buy into this pullback here. Then we got Nordstr. It's a good retail stock here. Right now, stock is down after the earnings. I would probably look at Nordstr here. High short ratio. This might do well as you go forward. Then we got here the COVID resurgence in Florida. That might be threatening the tourism industry, especially the cruise liners like Norwegian, Carnival Cruise Lines, Royal Caribbean. So it's good to look at some of these cruise line stocks when there is a really bad news about coronavirus, especially Delta variant. Then we got your space. Space is very hard. You have to put a lot of money into space, lot of trial and error type experimentation. So with that, these three stocks or four stocks here could be good to buy. So we got ASTR, Astra Space, we got Virgin Galactic, SPCE, L3 Harris, LHX, and even Rocket Labs, RKLB. We should look at these stocks here, and many of these stocks have come down pretty hard. Could be good to buy some of these stocks at these levels. And then you got Kdf Pharmaceuticals. Looks like they announced executive leadership change here. Stock was beaten up a couple months ago. Now it's coming pretty well. They have a temporary short-term drop here. Could be good to take advantage of this short-term drop. We got multiple solar stocks here not doing great. We got Sunrun stock dropped 16.5% in August. I think they raised their guidance. I think the problem is they got their cost of revenue. It grew 124%. That's why market is watching the cost of revenue here. I would be buying Sunrun at these levels and take it from there. And Stitch Fix looks like its stock has come down after the earnings. They do have some cash. They have enough cash to take on and continue their operations. I would be a buyer of Stitch Fix at these levels, and this stock also has got a higher short ratio and probably good to buy at these levels. So with that, let's look at the stock chart and few numbers here and see what makes sense to buy. So if you look through here, we got monthly winners here. A look at stocks like Dynavax, Editas, Lithium, which is LAC, Marathon, and Hyzon, and so on and so forth. Keep watching the RSI levels here. RSI 69, 62, 71, all well above 60. So at these levels, I think it's good to wait and watch a little bit and take it from there. And watch what happens when the RSI levels go higher. The institutions, they're pretty smart. When the RSI level is higher, they tend to sell. So as you see here, institutions are selling. So they know how the game is played here. And also watch the short ratio here. Short ratio is high here, 18%, 11%, 11%, so on and so forth. Many of these small cap and mid cap stocks, they go up and down because of these short squeezes For example, many of these plays, I think stock went up nicely, so that's why shorts are covering, stocks are going up. So that's why you see short ratio is high here, stock has done great. On the contrary, if you look at the monthly losers here, you got stocks like Hippo, Cassava or Sava, Tuya, Wish, and so on and so forth. And look through here market capitalization and RSI levels. My main thing I look at is really one indicator is RSI. Look at the RSI here, all well below 50. That tells you, what, these big institutions are really looking at these RSI levels. Look what happens to the short ratio here. Short ratio 14%, 12%, 17%, 14%. So basically, shorts, we do have some shorts, but look what happens at the same time on the institution buy. Institutions are buying, Tuya, they're buying 22% here. Room, Stitch Fix, YSG, SID, and Virgin Galactic, they're buying. So what happens here is really when the stocks are high, when the RSI levels are high, especially above 60 or so, the big institutions are selling, and even short sellers are covering, and stock squeezes and goes up. On the contrary, when the stock drops, look at these monthly losers, RSI levels are lower, below 50, and institutions are buying, and short sellers are really sitting pretty here, and in no time they get squeezed, and we have a swap. Monthly losers will become monthly winners, and monthly winners will become monthly losers. That's what is going on off late, especially in the small cap and mid cap names. The losers and winners keeps getting switched up as we have the short squeeze. Something retail investors like we can watch and learn here, this game of short squeeze and how to play this game here. So with that, let's look at the chart here. On the top, you got Spice, Virgin Galactic, one of my favorite stock, Richard Branson's company. Stock has come down pretty hard. As you can see here, RSI 39. Stock is completely oversold, witnessed by the 1 day, 1 week, all down here. Has done pretty okay in 1 year chart. And institutions are owning right now, and both insiders and institutions are not buying at present by looking at this year. And nice gross margin here. Low IV percentile, if you're a options person, you could look at low IV percentile and low RSI, and you could initiate a options buy or a call option purchase for a long term, maybe 100 days out. So I like risk reward of Virgin Galactic at these levels. I would be buying some stock myself and taking it from there. And then we got your Cassava. Yeah, I think they had some little bit challenges, with their indications or FDA around approvals, I guess. So stock has dropped, as you can see here, big drop in 1 day, 1 week, and so on and so forth. And look through your short, there is a high short ratio here. So I would be a buyer of SAVA at these levels here, and this stock is one of the favorite meme stock, goes up and down wildly. And then we got your charge point. As you scan through here, charge point has is $22 stock. Insiders and institutions both are selling at these levels. Nice gross margin, and RSI is 45. Stock is oversold. IV percentile a little high, which is understandable, and institutions have good percentage of the stocks owned right now. So at these levels, I would be a buyer of charge point, given there is a higher short ratio here. And then you got your Riot blockchain. As you scan through here, this is one of the stock in the in the crypto area that has not participated in the upward move. All the other cryptos like BT, Marathon Digital, even BTCM, they all went up, but this stock here has not done great. So I would be looking at buying Riot blockchain at these levels. Given there is a high short ratio of 24%, this could be one of the good candidates to buy at these levels. And then you got here TAL and United Steel. Right now, as you can scan through here, low RSI, and they got pretty okay from a short ratio perspective. I think it's pretty respectable here. You could initiate a position at these levels. Both have got good fundamentals, as you can see here. Especially Chinese online stocks, educational stocks have been making a slow comeback. It's a good one to buy. I'm sure TAL will figure out how to navigate Chinese online education market. And then we got your Zynga, Norwegian Cruise Lines, Tilray, all at a low RSI levels here, as you can scan through. And they also have, especially Norwegian Cruise Lines has got a higher short ratio. You could buy, Norwegian Cruise Line at these levels. And with the exception of Norwegian Cruise Lines, all of them have got positive fundamental sales growth here. I would be a buyer of these stocks at these levels. And then we got here Marathon, same story, low RSI, and I think it's okay from a quarter over quarter growth perspective. And then you got Skillz here. Skillz, as you can see here, stock is sold off. RSI is 49. Trying to make some comeback in near term. Has a lot more room to run here. 74% off from 52-week high. I'd be looking at Skillz at these levels. So with that, these are the most active stocks, and there is a lot of volume going into these stocks. These are sorted by highest volume on the top here with the SPCE and so on and so forth. Very liquid stocks. I would be looking at the ones which are highlighted here and taking it from there. And also pay attention to what institutions are doing and what insiders are doing at this time. These stocks, there is not too much institution and insider buying here, but look at RSI levels here, and IV percentile, and take it from there. If you're an option buyer, look for low IV percentile like Spice here, or even Riot Blockchain as an example. But if you're an option seller, pay attention to the IV percentile which are higher. For example, 63, you could sell some put options or sell some strangle as an example. And same story with B2B gold, little higher. But B2B gold stock itself is being at $3.99. I would buy stock outright. So with that, this is most active mid-cap stocks. I would pay attention to the names which are in gray background here. Next, let's look at monthly active winners. Here, as you all know, I will not be going after the winners big time. Instead, I will focus on the losers. Losers will turn into winners. So this chart tells you from an RSI level perspective, look here, high RSI. So that's why we don't want to play when the stocks are high. We don't want to chase after them. But if you are a options person, you could look at high IV percentile. For example, RSI here, 69 IV percentile, and we got DNMR, high IV percentile. You could take advantage of some of these and sell some premiums and play that way. And next we'll look at mid-cap monthly losers. These are the weekly losers. I pay very close attention to these losers because they typically turn into winners. So we got JOBY, AEO, which is American Eagle. I think retail stocks have fallen off the cliff last week. And then we got Cassava, AMRS. Look here, look at RSI levels all lower here. And look at stocks like Joby here, 9% institutions buying, and AMRS, 21% institutions buying. So even Cassava, for that matter, institutions are warming up to it, and same is the story with AEO. So with that, with the high short ratio here, with the AEO, Cassava, and AMRS, I would be a buyer of these stocks at these levels and take it from there. And then we got here ASTR, which is again into space here, Riot Blockchain, Harmony Gold, and then we got Oatly. Many of these, as you can see, are very low RSI levels, below 50. And in many of these, for example, ASTR, institutions are buying heavily. Right, blockchain, same story. This is one stock in the crypto area that did not participate in the upward move. Institutions buying heavily, even Harmony, there is some institutions buying here. And as you scan through here, look for short ratio here with right blockchain, high short ratio, and with Harmony there is some short ratio here. So with that, I would initiate a position in the right blockchain. I think that could be a good one to buy with this higher short ratio coupled with stock taking a breather in the shorter term here. Next, we look at SID, JWN, which is a Nordstr here, which dropped off big time after the earnings. We got Virgin Galactic and Urban Outfitters. Again, stock dropped big time after the earnings. So look through here, we got institutions buying many of these stocks here with SID 7%, Nordstrom 12%, Virgin Galactic 7%. And as you scan through here, low RSI tells you stock is oversold at these levels. And look through the short ratio. From a short ratio perspective, we got Nordstrom high short ratio, Virgin Galactic high short ratio. That makes those two as the ideal candidates for a short squeeze type play. And I think these are good ones. You could look at these and play along. Then we got a couple more here, ANF, which is and TRIP, GGB, NCLH Norwegian. And as you scan through here, looks like GGB, there is some institutions buying this stock here, and all of them got low RSI levels. And short ratio perspective, TripAdvisor has got a high short ratio, and so is Norwegian Cruise Lines. Probably, and even ANF for that matter, it's a little higher short ratio. So you could look at some of those names, buy slowly into this weakness and take advantage of a short squeeze type situation here. And then we got a couple more here. We got NOV, Beyond Meat, Stitch Fix. I think in case of there is some institution buying in NOV and Beyond Meat, and Six Flags here looks like there is some insiders buying Six Flags. Looks like they thought it's a good long-term play here. When the insiders buy like this, it's a good indication stock might go up. Look through the RSI here, low RSI. That's a good indication. And stocks like Beyond Meat, they got good fundamentals and sales growth, as you can see here. And same story with Six Flags here. I would be a buyer of these stocks here. And if you scan through the short ratio here, Beyond Meat has got a high short ratio. So Beyond Meat has a history of going up and causing short squeeze. I think probably it's a good one to buy at these levels here. Then we look at monthly mid-cap losers. Again, it's always these losers turn into winners. The ones I like at these levels are, Cassava, Tuya. And if you see here, Tuya has got high institutions buying here, and Cassava also has got 2% institutions buying. Stock has been sold off. As you scan through here, RSI indicates stock is sold off. And as you scan through here, Cassava has got a higher short ratio, 14%. So that could be a good one that can cause some short squeeze as you go forward. Cassava also has got a high IV percentile. If you're an options person, you could sell some premiums and make some money. Be careful, to lose too much money. Use some, spreads if you are not comfortable trading outright. And then we got here Room, Stitch Fix, CommScope, and so on and so forth. Look at the ones in gray background here. And also watch what institutions are doing. Room, there is an institution buying here. Stitch Fix, same story. YSG, big time. And even Nordstrom, and there is some good institutions buying here. And as you scan through the RSI levels, all are oversold at these levels, much below 50, as you can see here. And as you scan through the short ratio here, Room, Stitch Fix, and even Virgin Galactic, Nordstrom, AEO, and here we got Smile Direct. All I got high short ratio that makes them ideal candidates for a short squeeze as I go forward. It's always good to buy, these names which are sold off, and then participate in the short squeeze in a week or two and take it from there. And then we got a couple more here: Harmony Gold, AU, even Callaway Golf for that matter, Sunrun. So look what's happening. The institution buyers, they're buying here, and they're buying Callaway Golf here, ELY. And many of them have got nice long-term sales growth here, with Callaway growth nice fundamentals, and even Sunrun nice fundamentals. And look at the short ratio here, with Sunrun here a little bit higher short ratio, and even Callaway Golf has got a little higher short ratio. Those could be the ideal candidates for a short squeeze, and they might go up. So typically, short squeeze or not, some of your fundamentally, fundamental long-term stock, investors, you should look at, the sales growth here. Look for double-digit sales growth in 1 year and quarter over quarter. And from a timing perspective, look for a lower RSI level. You can participate that way. But if you're an options person, pay attention to IV percentile. Higher IV percentile, you can make money by selling premium. For example, here SAVA and even Smile Direct. But a lower IV percentile like SPICE and SID, you should be able to buy some long-term call options and participate in the stock movement that way. So with that, we got few charts here. We got SPCE here, Virgin Galactic. Stock has been selling off late here. On the balance volume is pretty steady as of now. So I would be initiating a buy here. And as you scan through here, we got insiders and institutions selling. Stock is sold off with the RSI 39, very low. As you see here, 1 day, 1 week, all the way to 6 months, stock is sold off. I think at these levels, I'm a buyer. And with the high short ratio here, 14%, that can go up. And then you got Cassava here. This stock has got, Mimi stock written all over it. Up, down, up, down, up, down. Now all the way below 200-day moving average. High short ratio here, 14%. And as you scan through here, stock is sold off in the near term. So I would buy some SAVA at these levels. From a on the balance volume perspective, it's a little bit down here. I think it's stabilizing at these levels. And then we got ChargePoint here, CHPT, right now $22 stock, as you can see here. And it's got 7% short ratio. Look at the on the balance volume. Stock is coming down, as you can see here. It's around 22. On the balance volume is going up. That's the indication that stock will do better. Smart money is buying the stock at these levels. And then we got here Riot Blockchain. This is one crypto stock that did not participate in the upward momentum of crypto here. Stock has been trading this, in the trading range here, but on the balance volume is pretty steady here. That's why I would be a buyer of Riot Blockchain at these levels. And look at what's going on here. High short ratio, 24%. And institutions are buying, hand over fist. So I would be a buyer of Riot Blockchain at these levels and take it from there. Next, we got a couple more here. TAL Education, Chinese online education play here. Stock has been sold off after China announced that these online education plays cannot charge K through 12 education any fees. That's why all these stocks came down to earth. Look what's happening now. Stock is stabilizing. On the balance volume is also stabilizing. That's a good story here. Stock is squarely in the bearish territory right now. But look here, there is some improvement in the 1 week here, 7% up. And also as you scan through, it's a high short ratio, 9%. And this is a fundamentally good company with the positive sales growth. So I would buy some TAL at these levels. And now let's look at Zynga. Zynga is a video game play, as you might be knowing. As you scan through, fundamentally good company with the nice sales growth here. And as you scan through, it also has got a little higher short ratio, 7%. RSI is very low, 45. So that makes it a good candidate to buy. Look what's happening in the on the balance volume. On the balance volume is pretty stable. I think it's trying to go up a little bit. Now it's stabilizing. That's why I would buy some Zynga at these levels and participate in the video game market. Then we got Norwegian cruise lines. Lot of news in the market. Delta cases are going up. That's why this stock has came down, as you can scan through here. But on the balance, volume is pretty steady. So the big players understand the game here. When the market is scared of Delta, that's when you buy these cruise liners and airliners. That's where Norwegian dropped, as you can see here. 24% drop in 3 months here. Inside institutions are buying a little bit, and RSI is 47. Tells the stock is sold off at these levels. I would be a buyer of Norwegian cruise lines slowly and accumulate. And then you got Tilray. As you all know, many of these cannabis stocks have come down pretty hard of late. Tilray is one of the big names in that area. As you can see, your stock is stuck in the trading range for a long time, but on the balance, volume is pretty steady. And as you scan through here, short ratio is 8%, a little higher. So I would be a buyer of Tilray slowly at these levels and accumulate. Next, we got few more here. We got Skillz. Skillz stock has been sold off of late, as you can see here, squarely in the bearish territory with 200-day moving average on the top here and 25-day moving average at the bottom. There is some bullishness right now with the stock taking on its 25-day moving average, slowly bumping into 50-day moving average. And as you see here, on the balance, volume is going up. That tells you smart money is flowing into the stock at these levels. And as you look through here, short ratio is 21%. This can cause a short squeeze. I think squeeze started to happen, as you see here, 12% in 1 week and 15% in 2 weeks. But RSI is still low. You could still buy the stock at these levels. And then we got here JWN Nordstr here. As you see here, after the quarterly earnings, stock came down pretty hard here. RSI is also, on the balance, volume is stabilizing here. And there is a high short high short ratio, 16%. I would buy some Nordstr at these levels and participate in the short squeeze. Then we got Beyond Meat here. Beyond Meat actually came down after the earnings, as you can see here. On the balance, volume is pretty steady here. People are buying into the stock here. I would be a buyer of Beyond Meat at these levels. As you scan through, stock is undergoing some pressure in 1 day, 1 week in the shorter term, and short ratio is pretty high, 22%. So I would buy some Beyond Meat at these levels and take it from there. Then we got AMRS here. As you scan through here, stock has come down. RSI is pretty low, 45 here. Institutions are buying both AMRS as well as Nordstr here. I would be buying along with them. Even Beyond Meat, the institutions are buying a little bit. So with that, I would go with the AMRS here. Given on the balance, volume is pretty steady on the higher side. So next we'll look at a couple more here. Stitch Fix stock has been trading in the sidelines for a while here. On the balance, volume is a little bit downturn, but not drastic. Institutions are buying Stitch Fix here. High short ratio of 17%. I would buy some Stitch Fix at these levels. And then you got Smile Direct. Smile Direct, I think stock dropped a lot. Now it's trying to make a way higher. Same story with the on the balance, volume is trying to go higher here. And this got high leverage on the balance sheet, as we all know. So right now, as you scan through here, short ratio is 33%, one of the highest in the charts that we have seen so far. So I would be buying some Smile Direct into the weakness and take it from there. We got Sunrun here. As you look at the chart here, stock is in the sideline for a while, Most of the solar stocks are down of late. And on the balance, volume is picking up, and as you see here, a low RSI 47, high short ratio. That makes it a good candidate for a short squeeze. I would buy some sun run at these levels here. Even if you're a fundamental person, I think it's good to buy because there's a fundamentally good revenue growth here. Then we got room here, $26 stock. Stock has been not doing great here. So as you see here, on the balance, volume is stabilizing now, and there is a high shorts ratio here, 12%. So I would be buyer of a room at these levels and take it from there. So with that, you always wonder when to buy and sell stocks. So what I typically do is I look for good entry point that tells you, that gives you a good margin of safety. Look for RSI, below 55, below 50 is even better, and look for on the balance volume racing that tells you smart money is buying the stock. So those are your good candidates from an entry point perspective. If you already have the stock and wondering what to do, look for RSI higher, greater than 60, and on the balance volume, falling a little bit. So in this scenario, if you have the stock, you can sell in stages. But if you don't have the stock, if you don't buy the stock at these levels, but if you have the stock, then you can sell in stages. This is when you got to understand market. Sometimes markets are trending. When markets are trending, you don't need to sell. You keep it, and sell a little bit if you want to take some profit. But trending markets, keep watching on the balance volume. If it is going up, don't sell quickly. You can participate in the stock going higher. Always buy and sell in stages. If the stocks are consolidating for a while and showing some signs of bullishness, that's when you jump in and buy some. For the stocks nearing 52-week high, look for a pullback before buying. And stocks nearing 52-week low, look for a sign of price increase before buying. Stocks with a huge drop and showing some signs of bullishness, that's when you can buy slowly. A high short ratio can be a good catalyst when the stock is sold off, especially when the stock is fundamentally good. That's a good indication that you can buy some. And when insiders or institutions are buying the stock, that shows the conviction from insiders and big money managers. You can also buy along with them, especially when the short ratio is high. That can give you a good swing trading opportunity. Fundamentally good companies with a positive sales growth, you should buy them when they're down. Rule of 40 tells you when the quarter over quarter sales growth plus gross margin greater than 40, that's a good candidate, fundamentally sound company. Typically, when there is a secular growth company or either a biotech stock or a software stock, when they're down on a bad news, it's always good to buy a little bit. You might look like a contrarian because stock is down so much you don't know what's the bottom. But typically, it's a good time to buy some at those levels and watch what stock will do. And if the stock is good, fundamentally good, with the rule of 40 here, that's a good one to buy slowly. If you're an option buyer, look for RSI less than 50 and low implied volatility, AVE percentile less than 40. That will give you some more room to run, and you're not paying too much premium when the AVE percentile is below 40. If you're a call option seller, look for a high RSI. You're selling the call option above the current stock price. That's why you look for a high RSI above 50, and also look for a high AVE percentile. That way you can make more money off of the premium. If you're a put option seller, look for a low RSI and high IV or high implied volatility. That's when you can make some money selling the premium. At the same time, you want the stock to go up. That's why you're choosing a low RSI. So with that, thank you very much. Happy investing and trading. Please subscribe.